Good morning. Welcome to the B.F. Anderson Technical Report for July the 30th. This graph pretty much, or this table, pretty much itemizes why politics really isn't very important. You know, last week, we showed what happens when Democrats win the White House and the Congress, and the annual return is about 13%. So my daughter asked me, said, well, what happens when the other presidents were elected? Well, you kind of can see here that it's all based on economic cycles. So when you look at something like a Herbert Hoover, which went through the Great Depression, then Franklin Roosevelt looks like a hero because we came out of the Depression. The stock market zoomed. This is, World War II. Then, people talk about the performance under Bill Clinton. Well, that was when the internet was invented. So basically what I'm saying here is that politics is important, but not when it comes to the stock market. Here's the graphs. Let's just kind of see what's going on here. This is the NASDAQ. As you can see, we're continuing to be in a strong uptrend, 25-day, 50-day. Had a little bit of a pullback, tested the 25-day, and is continuing to rally off of that, so it looks good. Now here's the NASDAQ on a weekly basis. Using the 35-week moving average, we continue to be in a strong uptrend. S&P 500 using a monthly graph continues to be in an uptrend. The 10-month over the 20-month moving average continues to be on a bullish cross, golden cross, and it looks fine. Same thing for China. We're seeing a buy signal on China, so we should pay attention. On the NASDAQ, continues to be the strongest index. You can see on the monthly graph we're making new highs. This is the aggression index, where we're comparing the NASDAQ or technology to consumer staples, which is basically comparing computers to toothpaste and things like Procter & Gamble. Well, you can see we have had a pullback here, which, it got red hot, and so we have pulled back to the 50-day moving average. Let's see if it stabilizes here. It needs to consolidate its gains. This is the same index or the same ratio on a weekly basis, where we actually use the indicator being the 40-week moving average. As long as that stays in an uptrend, things are fine. So, the market tends to favor aggressive stocks at some points, and that's where we are right now. Now, on the three economic indicators, again, interest rates are just going absolutely nowhere. They're doing nothing. Oil continues to be flat at best, not getting above that 200-day, and that 200-day is a downtrend line. Continue to avoid oil. This is the financial stocks. These are the banks and the insurance companies. Continues to be fairly flat, not above the 200-day moving average. Now, on sentiment, we are still in an extreme greed reading on the put-call ratio. You can see here with the VIX continues to stay below 30, which is very positive. That's what you want. Now, if you're in an uptrending market and you've got a VIX showing low volatility, you're going to get a lot of greed. But just be aware of this. It's not like a sell signal. It's just telling you that the institutions are putting money to work. Here we have the S&P 500, where we can see we're trying to break out of that basing pattern right there. This is the daily graph where we're comparing the 25 and the 50-day moving average, trying to break out. However, we are above the 200-day moving average and looks very constructive. Like I've said, the 200-day can act as resistance. You get through, now it's acting as support. Very positive. New lows, we're just not seeing any. The number of new lows on the New York Stock Exchange are just not above 40, where we would be concerned. Now, I thought it was interesting to see this study here. It says that year to date, the 5 largest stocks have returned 35%. And the other 490, this is of the S&P 500, so 5 of them are have returned 35% year to date, and the 495 have declined by 5%. So you would say, hey, this is a very narrow market. But let's kind of look at the facts. But first, let's just take a quick look at the 5 stocks they're mentioning. Here's Amazon. Now, if you notice here, I've got a trend line on there, and Amazon has broken that trend line. However, this is not the end of the story, I'm sure, but it is breaking the trend line. Look at Apple, same thing. We have broken the trend line. These stocks may be starting to peak out here, but not for sure, just breaking the trend lines. Here's Google, same thing, breaking the trend line. Facebook, same thing. broken the trend line, Microsoft, and so forth. So we're seeing this leadership starting to falter. This could be the meaning that what I would take away from this is that I would be looking around at other opportunities. Now, to kind of make the point about how broad this rally has been, it really has been broad. I mean, it's hard to see it when we see the top 5 stocks dominating the S&P 500. But if we then go to the value line geometric index, which is 1,700 stocks, it's a very broad index. This has been one of the strongest bull markets that I have seen, or we have seen in history. So in other words, the way we measure this is we go back to 2009, the only comparable period. This is rate of change, and this is a weekly graph. The market made a low on March 23rd, approximately 17 weeks ago. So what we've done is the same thing for 09. You got about a 40% drop where the rate of change was 40%, then it went to plus 40%. That's only happened one time, and that's where we are right now. We got a reading of minus 40%, then plus 40%, and this is on a very broad index. So I'm not so sure that the market's not broadening out. It kind of looks like, using this index, you would have to say it is. Now let's get into the top 5. Now we're just basically trying to see what stocks are acting the best in the marketplace. Now this is a very interesting company, DocuSign. We've been in the stock. We own the stock. Basically, they're involved in, no touch, no see of documents. The banks are using these documents or DocuSign. The car dealerships are using it. The mortgage companies are using it. This is a way to become more productive in transactions. This is Fastly. This is a company that's involved in the internet. They have technology, mainly software, that makes the internet run faster. So when you've got more people on the internet due to social distancing or whatever the reason, you can see why this would be important. Novavax, again, this is one of the companies that are getting capital from the government to start manufacturing their vaccines. So Novavax is continuing to act strong, just made an all-time new high. Tesla continues to, now I will say we let Tesla go on this break here. Now we're going to monitor the stock and we'll see. But however, I did not like the fact that it broke the 10-day moving average. The pattern is still constructive, but I'm looking elsewhere. This is Zoom Video, which is another company that benefits from the coronavirus stay-at-home technology economy that we have now. So basically, Zoom continues to act well. So that's it. If you have any questions, please give me a call. Thank you very much.